Good day, everyone. It's pleasure to be with you all. Before we dive into today's crucial topic, Philippine Financial Reporting Standards, allow me to introduce myself first. I am Miyaka Cassandra Pagiligan. Joining me today are my valued co-speakers, Ms. Jenna Ramirez and Ms. Lorraine Torres. Now, let's get started. You know how in our daily lives, trust is super important, right? Like we trust that what we see is what we get. Well, the same goes for businesses, especially when they're showing us their financial health. Here in the Philippines, the trust in business numbers is built on something really specific. So today, our group is here to talk about the main rule book that companies follow when they're putting together their financial reports. It's called the Philippine Financial Reporting Standards, or PFRS. So you might be thinking, what exactly is PFRS? Basically, it's like a set of clear instructions, principles, and rules that tell companies how to account for all their money stuff, how to recognize it, measure it, show it, and explain it in their financial statements. These standards are put out by our very own Financial Reporting Standards Council here in the Philippines. Think of PFRS as the standard game rules for Philippine businesses. It makes sure that whether you're looking at Globe Telecom or SM Investments, they're all playing by the same accounting. This means their financial information becomes comparable, reliable, and easy to understand. And that's a big deal. It's crucial for us as future professionals, for investors who are deciding where to put their money, for banks lending to businesses, and even for the government and the public. During our seminar today, we're going to dive into some key aspects of PFRS, what PFRS is all about, and why it's so important, its main objectives, and how specific PFRS standards like PFRS 9 for financial instruments or PFRS 16 for leases work in practice. Why companies have to follow these standards and all the benefits they get from doing so. And finally, we'll wrap up with the main takeaways and a call to action. The goal isn't just to tell you what PFRS is, but to show you why it matters to us, especially as students in this field, and how it impacts the real business world here in the Philippines. We want you to live here with a solid grasp of why these standards are so vital for keeping our economy transparent and stable. Alright, let's jump into understanding the ins and outs of Philippine financial reporting standards.
Hi everyone! Today, let's take a quick look at something that's very important in the world of business and accounting, the Philippine Financial Reporting Standards, or PFRS. So what is PFRS? Is a set of accounting standards used in the Philippines to guide how companies prepare and present their financial statements. These standards are based on the International Financial Reporting Standards, or IFRS, but are adapted to meet the country's specific needs. Now, why is this important? If every company uses a different way to report their income or expenses, investors, auditors, and even the government will have a hard time understanding a company's true financial position. That's where PFRS comes in. It provides consistency, transparency, and comparability. There are different types of PFRS standards. For example, PFRS 9 deals with financial instruments. PFRS 15 focuses on revenue from contacts with customers, and PFRS 16 covers leases. Companies in the Philippines, especially those that are publicly listed or regulated, are required by law to follow PFRS when preparing their financial reports. Following PFRS ensures that businesses give a true and fair view of their financial health, which build trust with stakeholders like investors, banks, and customers.
Good morning, good afternoon, and good evening, everyone. I am Lorraine Torres. Let's discuss the main objectives of Philippine Financial Reporting Standards, or PFRS. PFRS focuses on building a framework for financial reporting that helps businesses and organizations provide transparent, consistent, and comparable financial information. The PFRS plays a crucial role in shaping the financial reporting landscapes of businesses and organizations in the country. At its core, PFRS aims to provide a framework for financial reporting that promotes transparency, consistency, and comparability. By setting standards and guidelines for financial reporting, PFRS enables stakeholders to make informed decisions about investments, lending, and other business activities. The main objectives of PFRS includes providing clear and accurate financial information, ensuring consistency and comparability in financial reporting, and promoting accountability in the financial report. To achieve these objectives, PFRS sets out specific requirements for financial statement preparation, disclosure, and presentation. By following PFRS, businesses can ensure that their financial reporting is reliable, accurate, and transparent, which in turn to enhance the credibility and trustworthiness of their financial statement. Furthermore, PFRS helps to facilitate comparison of financial performance across companies, industries, and sectors, enabling stakeholders to make more informed decisions. Overall, PFRS provides a vital framework for financial reporting that supports the development of a robust and transparent capital market in the Philippines. By adhering the PFRS, businesses can demonstrate their commitment to transparency, accountability, and good governance, which can lead to increased investors' confidence and improve access to capital. So that is the main objectives of PFRS, or Philippine Financial Reporting Standards. That's it. Thank you.
So, to sum it up, PFRS isn't just about numbers. It's about trust, transparency, and making sure everyone speaks the same financial language. Thanks for listening, and I hope you now have a better understanding of Philippine financial reporting standards.